auto slowdown left dealers sitting on unsold cars. It affected another key player in the auto supply chain, the fleet operator, who brings the cars to showrooms from the factories. Logistic business was dull in the auto sector, but in the small and also in the small and medium scale enterprises, which presumably is yet to get back into the big rolling. Lower freight costs have also added to the woes. However, what's worked beautifully is what's happened presumably to the kind of parceling that has happened on account of the large ticket consumer appliances sales on the online platforms and otherwise. So how are both of these balancing each other out, if they are? Somebody who understands the situation and gets affected big time is TCI, and let's understand the situation with Managing Director Vineet Aggarwal. He joins us right now on the show. Vineet, good having you. Thanks so much for joining in. Can you put this into perspective? The last few months, we all know, haven't been the most impressive. But if Amazon and Flipkart are to be believed, and of course they have to be believed because they've put out those numbers, but the sales, especially in Tier 2 and Tier 3, were quite dramatic on the consumer goods, and that would have meant enough ferrying as well. So how are both of these factors balancing each other out?
Hi, good to be here on the show today.
Thank you.
So clearly there has been an indication that there is some pent-up demand in the system. So that pent-up demand, and Indians love a good deal. So I think at this time, with all these online sales happening, people are using this opportunity to buy whatever they had to, which they haven't been buying in the last few years. We have to remember that how supply chains have started to change for retailers. We are now looking at an omni-channel retail system. So a manufacturer of, let's say, a television could be selling televisions through their own company branded stores, could be selling televisions through a multi-branded retail consumer durable outlet, could be selling through a retailer like a Big Bazaar or something like that. And then finally also selling through their own website, and last but not the least through companies like Amazon and Flipkart. So these multifarious channels are essentially now sources for consumers to buy. So they could go to a store, see something, like something, but perhaps go and buy it online. So what we've been seeing in the last, and not just few months, but a few years, is that this trend is accelerating quite a lot. What has specifically happened in the probably in the last 1 month or so is that now with these sales, which are actually almost every month, we are seeing that the trends are consumers are flocking here more and more, perhaps even lesser to the high street shopping that you've seen in the past. So this is the time that whether it is the Tier 2, Tier 3, the demand during this festival season has been quite robust on the online channels.
And has it helped fleet operators by and large? I mean, this is different because it involves probably individual packaging or group packaging and not necessarily bulk from wholesaler to the depots. So is it helping the industry? Do you have some exposure here? Is it helping you as a company too?
So again, in part of the supply chain, if you look at it, even if it has to go to the final consumer, it has to come from some factory. It has to come from some depot somewhere. So there is that B2B element where it will move from a factory to a warehouse, and then subsequently from a warehouse of that particular manufacturer or retailer to the retailer like the online retailers. So that movement is also one part of that supply chain. The second element is actually inside the warehouse, which is the complete order management, order fulfillment. So companies like us do all of these part of this chain. Inside the warehouse, there is a fulfillment aspect. So as a consumer, when you place the order, we will pick the order, pack it, invoice it, in some cases even barcode the product, do maybe some quality checks, etc., and keep it ready for dispatch. Now that dispatch and that final last mile that has to happen could happen through many express companies. We actually do it through some of with our own express company, but mostly it is the last B2C element that works there more efficiently.
I'm understanding that business for you would have picked up due to various things that a company like you or some of your peers might be doing on all of these parameters, and with the online sales moving up and moving up dramatically, business should have picked up. And what percentage of your portfolio would something like this constitute, Vineet?
So yes, business has picked up in the festival season. Typically, volumes for us tend to go almost 3 to 4x or sometimes even 5x of the regular volumes. And essentially what has happened is that though this has seen a substantial rise, it is still a very, very small percentage of our business, or generally even of the whole market. I think online retail sales is perhaps 5% or 6% of the overall retail market, or maybe even 10%. So it's still a very, very small percentage of the overall market. We also have to see what's happening at the trader level, at the small stockist level. So we do work in smaller towns as well, and what we've seen is that there is movement that happened in August and a little bit in September to do the real restocking that has happened at tier 2, tier 3, and even lower cities as well. So some movement has happened because of the festival season, but I don't think it's huge.
Okay. So what you're saying is it's not a really big share or a big pie with regards to your own revenue contribution or your own share of volumes, right?
That's right. We do a lot of B2B business. We do fulfillment as well, but no, it's not a very large portion of our business.
Okay, so let's talk about the other aspect of your supply chain division and how that has been impacted with the other segment which is getting affected with a slowdown, quite contrary to what we're seeing in terms of the online sales, which is the auto segment. And now with the slowdown in the auto segment, how has that been an added impact for a company like yourself?
So overall, the auto segment is a large portion of our business, but it is under 20% of our overall business. Yes, it has been affected to a great extent in terms of the final sales. We also are seeing some production losses as well in the last few months. We've not been exposed to some of the very large companies. Our contracts there are very limited. So the fall that we've seen in companies like Maruti, etc., has not affected us too much. We're also quite diversified in the automotive segment, where we are doing work not with just the four-wheelers, but even with the two-wheelers, two-wheeler companies, with the tractor manufacturers, with the earth-moving equipment companies, and so on. We also have to remember there are three parts of the supply chain for the automotive supply chain. One is the inbound logistics, which is parts coming in from suppliers for manufacturing. The second is the finished product movement, which is the cars and the bikes, etc., moving to the dealers. And the third aspect is the spare parts management and the movement. So when these two, the first two, don't do too well, at least the spare parts is doing relatively well. So we've seen definitely a lot of growth in the spare parts side of the business as well. We've also seen that exports have not really come down. So they are more or less at the same level. So some of the companies that are focused on exports, and we've been doing work with some of them, has helped us to keep up our growth momentum. What I could definitely say is that it has affected us, but not too much, as it has affected the entire industry.
All right. So with carrying that forward with regards to exports, how has that affected the Seaways business? Do you see a softness out there as well, considering that some of these companies have slowed down exports too?
Actually, our Seaways business is entirely domestic. So we do only coastal shipping, which is, we just bought a new ship last week because we are seeing that in the next few months, the growth in this sector is going to keep coming back. So we do operate on the west coast, which is from Mundra to Cochin, and on the east coast from Chennai to Port Blair. So we are seeing relatively okay demand there, not extremely buoyant, but it's not bad still, because companies are moving towards different modes of transport, not just road, but they're looking to do sea and rail and so on. So that's where we are seeing that a multimodal player like us has a lot of benefits.
One last question from my side with regards to focus on improvement of margins by focusing more on value-added services and less than truckload business. Do you feel that's going to be the way forward that you're going to be focusing on to make sure that you can spur up the margins a bit more?
Yes, less than truckload business has been growing quite rapidly. In fact, one of the positive consequences of having GST in the country is that, the whole idea behind GST was that we should have a unified free market. Anyone could sell anything anywhere. Now, we are seeing that happen to some extent. There are places from, let's say, very, very remote places around the country, people are sending material to even further away. Now, they are not worried that, okay, this material is going to go there, I need to get a C form, I need to get a local registration and so on. They can sell it with under the GST regime. If they see that there's a problem, they can also go to our local office in the 1400 locations we have as a group. So what has happened with that is that traders with who don't have a full truckload to send, they're happy to send maybe 200 kilos, 500 kilos, a few tons on and off. So less than truckload has a lot of potential to grow post GST and post the infrastructure development that has been happening.
Okay. And I'm understanding that because your results are not out, you probably can't talk strict numbers. We'll talk about those once your results are out, Vineet. But we hope to see the great margin performance that you showed in Q1 in Q2 as well. And look forward to talk to you about ROC and the other businesses then. Thank you so much for speaking to us today about these conversations.
Thank you.
All right, that's TCI on the festive season sales and how they have been benefiting the company, and also on some of the other aspects. Well, more corporate conversations. The new buyer should not suffer after acquiring a stressed assets under the insolvency process, says SBI Chairman Rajneesh Kumar. Speaking at the Bloomberg Equality Summit to Andy Mukherjee, he adds that the law gives government agencies no claim to the assets once the account has been accepted under IBC.
The financial creditors are sitting in the COC, operational creditors are not. So how do they get the fair deal? That is a fair question. It's not an unfair question. And we have to find some satisfactory formula to take care of this inherent conflict of interest, that is what I call. Unsecured financial creditors, I have a different take, because the risk-reward matrix is such that secured financial creditors, we get less reward in terms of what we quote the price at which we land. Unsecured creditor sits somewhere in between the secured lending and the equity. So there, my argument as a banker is that one, they are sitting on the table as part of COC and have voting rights, unsecured financial creditors. So it should be decided on the table. So operational creditors case is different. It will have to be dealt with differently. Unsecured financial creditors, this is a view from as a secured financial creditor. And still, if anything is satisfactory formula, which in a resolution situation, not in liquidation situation, can lead to less litigation, that can also be thought of.
But the curveballs are not stopping. I mean, Bhushan Power and Steel, for instance. Now, ED wants to attach those assets. Now, if fraud has occurred in that company, thanks to the previous management, then it's like, really, once again, your check is not coming, right? You have a willing buyer for the asset and you are waiting for your check and it's not coming.
Right. So that is what I'm saying, that all these issues are getting settled. Yesterday, even about the ED's attachment of properties in Bhushan Power and Steel, NCLAT has given a very clear direction that they have to be released and they cannot be attached. And that is the point as a secured creditor we have also made, that as far as any corporate debtors assets are concerned which have been financed by the banks, so we have the first priority and first charge. It cannot be disputed and should not be disputed. Any action which ED or any authority has to take, they can take with the existing promoters and attach their personal assets. We have absolutely no issue, but an asset which has been financed with the bank money, there is enough evidence on record. And in NCLT or IBC process, where somebody is putting money and buying it, they are not fools to put their money and be involved in all this litigation. So
they would want to be indemnified.
That is the whole purpose of IBC. But again, I am saying, because it is a new law, the understanding about the commercial principles.
Right.
It differs from agency to agency, but eventually all these issues are getting settled, and IBC process, the spirit is very clear that once whoever is buying, he is buying a very clean asset, it is a clean slate, and any legacy, any past baggage, the existing promoters would be responsible, existing directors would be responsible. The person who is acquiring, they cannot be subjected to any harassment or claims from the past by any agencies, and I am sure that that will be implemented.
Okay, on to the next conversation. The Committee of Creditors have approved JSW Energy's bid for Ind-Bharat Energy. Now it's up to the NCLT to give its go-ahead. The deal, once completed, will take JSW Energy's installed capacity to nearly 5,000 megawatts. What's also good about the project is the existing power purchase agreements. Add to that the fact that JSW Energy press release stated that they are also looking to acquire a few assets of GMR. So the eventual capacity is going to go up for JSW Energy quite meaningfully. Joining us to talk about all of this is the company's joint MD and CEO, Prashant Jain. Prashant, good having you. Thanks much for joining in. I know you can't talk numbers, so we won't get into specific sales, volumes, output numbers, but tell us, what's the stated intent, Prashant? You going out and acquiring capacities at a time when maybe they'll be available at a good price. The sector is not quite out of the doldrums as yet, I reckon.
Yeah, we are very, very optimistic about this sector because the sector has been growing 5 to 6% demand, and then there are no new capacity which is getting added up. And as I talked to you, a couple of months ago, and I said that we are seeing a power shortage in 2 years time frame in this country. So our stated strategy is that we would like to grow our balance sheet, which is very, very under leverage at this point of time. Our debt to equity is 0.85 times to 1, and so we have enough headroom to grow our balance sheet. So we have planned that we will be increasing our capacity to 10,000 megawatt in next 3 to 5 years time frame, and which is without any kind of a dilution of equity, and which will be very, very ROE accretive for the company. Now, in order to grow the business, we have been very particular about one particular aspect, that is that it has to be in the bottom quartile for the purchase basket of a particular distribution company. Then only you have a minimum receivable risk, because power is a social sector, and then that puts you in the priority list for a distribution company to pay off your receivable. So both these assets, Kamlanga from GMR Energy and Ind-Bharat Utkal, are fitting in that basket because the plants are at pit head. If you look at GMR Energy Kamlanga asset, there is a 85% PPA, 15% open capacity. The power variable cost will be south of 1 rupee 50 paisa. In case of Ind-Bharat Utkal, 2 units of 350 megawatt each, 1 unit commissioned, another unit is under construction, and it has complete fuel supply linkage, have 89% of the power purchase agreement. So it ticks all the check boxes for us. So that's why we decided that we will be looking at these two assets, and we expect that both the transactions should go through in the current financial year.
All right. Let's talk a little bit more also about when do you expect a complete closure, at least for Ind-Bharat? You're waiting for an NCLT approval to come in. Also, how is this different from GMR? Obviously, GMR, the asset is operational. We've not seen generation from the Ind-Bharat units for some quarters now. So how do these two add on their own scale to JSW Energy's portfolio?
As I mentioned, both the transaction I am expecting in the current financial year. So next 5 months time frame, I think both these transactions will go through, so the closure will happen. And in terms of Kamlanga unit, for the last 2 months, there was the disruption at the MCL mines because of excessive flooding, about because of the heavy rains which have happened, and also some disruption which has happened because of the certain safety related issues at the mine per se. So the generation was down, but they will be doing the normative generation, which is normally 80% PLF. So I'm quite confident that they will be achieving that number. And in terms of the assets, both are quite similar. But in case of Ind-Bharat, you have to, because the units are not operational at this point of time. One unit was commissioned but not operational, another unit is under construction, so it will take some time to operationalize Ind-Bharat asset. But we have factored all those things in our valuation when we have made a resolution plan. And what I can also tell your viewers and our investors that whenever JSW Energy is looking any kind of acquisition, we have been very, very prudent in our capital allocation. So we are for certainly looking at normative equity return on normative equity deployment. Even if we are deploying less equity, that will be enhancing our returns, but on a normative basis, if you are putting 3:1 debt to equity kind of a principle, we will be getting mid-teens returns. So, and if the equity is put less, then you will be getting little higher return. So that's how this deal contours will be looking like. So it will be ROE accretive from day one.
Okay. These are for both the projects?
Both the projects.
Okay. Could you also tell us if there is any form of an incremental expense that you will have to undertake aside from these bids that you've already paid for? I mean, that you're already putting in. So any incremental cost that you will be incurring?
You mean the capex to on these assets?
Yeah.
Yeah, so not in case of Kamalanga unit, but certainly in case of Ind-Bharat, there is an incremental capex, and but that will be that is a part of the resolution plan, and so deal contours will be taking care of that, and but these will be very, very attractive assets.
Okay, so
attractive valuation.
Okay, so just reading a report and wanting your view on how for both of these projects, if you were to keep in mind the kind of tariffs you'll get, the landed cost of fuel, the plant load factor of the Ind-Bharat projects, both of them, both the units 350 megawatts, how does that play out in terms of and how does the working for the EBITDA come about, keeping all of these individual factors in mind?
Yeah, I cannot talk about the numbers at this point of time because of the confidentiality reasons, and but we will be talking in due course. As I mentioned, is that we will be getting normative equity return, and which is mid-teens. So that's what we will be getting on the normative equity. So whatever the deal contour will be, whether it is 3 crore, 3.5 crore, whatever the number will be coming out, then on that we will be getting minimum normative returns. And some of the assets, there could be a substantially high potential on the upside.
Okay, just a small follow-up, and that's my final question really. The assumption is that you would be prudent on almost all of the counts, and that will lift the operating EBITDA quite significantly. I'm not asking for specific numbers, but is that a reasonable assumption to make?
Yeah.
Okay, so if the deal closure in the next 1 month or thereabouts, the operating EBITDA could meaningfully move up in trade.
I think Citi is putting a number of 400 to 500 crores.
Okay, so those are some numbers as well, but as Prashant said, he can't talk numbers. Prashant, just one final word, at least from my end. Would you believe that this is not the end of the road as far as acquisitions go? Because almost every single analyst on the street believes that if there's one company that's favorably placed to continue the spate of inorganic moves, it's JSW Energy.
I would like to put it this way that we are looking at 10,000 megawatt capacity in next 3 to 5 years time frame, and both organically and inorganically, but we will be very, very focused because we are not looking at every asset, because for us the most important thing is that there has to be a minimum possible receivable risk, because a lot of other risk you can mitigate, but this is one risk which you cannot mitigate, and that risk we are mitigating by putting the cost in the bottom quartile for the distribution company. So that's one most unnegotiable aspect for us. And we are also looking at renewable space, because that's the future is, and we see that now the predatory pricing mechanism which was there in last couple of quarters and couple of years, that is waning, and then the sense is prevailing, and we see that that's also good time to take a plunge in the renewable space. So all in all, we will be on chart to achieve 10,000 megawatt without any dilution of equity in next 3 to 5 years time frame.
All right, Prashant, it was great talking to you. Thank you so very much for joining us and giving us all of those details. So 2 big acquisitions in the pipeline for JSW Energy, and obviously distressed valuations, but most likely, according to most brokerages, going to be EBITDA positive for the company.
He almost confirmed that as well, so maybe they'll be prudent on that front too. But it's a wrap on this leg of Indian Open from Devina and me and the team that puts this show together. Thanks so much for watching. Stay tuned. The FNO show takes all the action on the other side.